Listen carefully, because what I'm about to tell you isn't theory, it's history repeating itself over and over again. Every single market crash, every collapse, every so-called unpredictable disaster always follows the same pattern. The signs are there, the warnings are clear, but the weak, they ignore it. The strong, they prepare. Before every market crash, there is euphoria. It is the moment when the world forgets the basic rules of discipline and replaces them with blind optimism. People begin to believe that the upward climb will never stop. They look at charts, they hear news of record highs, and instead of asking, "How long can this last?" they say, "This is just the beginning." That is the trap. That is the moment when caution vanishes, when greed becomes louder than logic. Ordinary men and women who once saved their money carefully suddenly become gamblers. They throw everything they have into the market, not because they understand it, but because they see everyone else doing it. The crowd becomes intoxicated with easy gains, and the more they see others winning, the more they believe that they too are untouchable. This is when arrogance creeps in. People stop respecting risk. They stop asking questions. They convince themselves that they are financial geniuses simply because they rode a wave that was already lifting everyone up. That false confidence spreads like wildfire, and suddenly the voice of reason is drowned out by the roar of greed. The dangerous part of this stage is not just that people invest, it's that they invest with no plan, no strategy, no understanding of what they're buying. They follow the crowd into overvalued assets, chasing the latest trend, convinced that prices can only go higher. History shows this pattern again and again, from the roaring 20s before the Great Depression to the housing bubble before 2008. Every time, the same delusion takes hold, that the old rules no longer apply, that we have entered a new era where markets will only rise. And every time, reality eventually strikes. But in those early, euphoric days, nobody wants to hear it. The truth is replaced by fantasy, and fantasy is always more seductive than discipline. The crowd becomes blind to risk because success has made them overconfident. They forget that what goes up can also come down, and the higher it climbs without reason, the harder it falls. This euphoria is not strength. It is weakness disguised as triumph, and it is always the first sign that the crash is already on its way. The second thing that always happens before a market crash is an explosion of debt. People stop living within their means and begin reaching for more than they can afford, believing that the future will always take care of itself. Borrowing becomes easy, banks loosen their rules, and investors convince themselves that leverage is the secret to building wealth faster. Instead of using money they have, they start using money they don't. It begins with small loans, credit cards, and margin trading, but soon it spirals into massive levels of debt piled onto weak foundations. Everyone becomes addicted to the illusion of growth created by borrowed money. They tell themselves they're smart. They call it investment strategy, but in truth it's nothing more than gambling with borrowed chips. The system itself feeds this hunger. Banks hand out loans with a smile, corporations issue debt to fuel reckless expansions, and governments encourage spending to keep the illusion of prosperity alive. For a while, it feels unstoppable. Debt makes everything look bigger than it really is. Bigger profits, bigger homes, bigger lifestyles. People forget that every borrowed dollar eventually demands to be paid back. They stop asking the hard questions because they are blinded by the temporary comfort that debt provides. But deep down, debt is a silent predator. It waits for the moment when growth slows or when confidence cracks, and suddenly the weight becomes unbearable. This is when the cracks in the system start to appear. A company can no longer meet its obligations, a family can no longer cover its payments, a bank realizes the loans it handed out are never coming back. Panic begins to spread because the entire house of cards was built on borrowed time and borrowed money. History has shown this again and again. The credit mania of the 1920s, the reckless mortgage lending before 2008, the corporate borrowing sprees that always precede financial chaos. The pattern never changes. Debt fuels the illusion of strength, but it is actually weakness hiding beneath the surface. When the tide of easy money goes out, everyone who relied on it is left exposed, and the dream of endless growth turns into the nightmare of collapse. Then comes the denial. This stage is perhaps the most dangerous because it blinds people to the truth even when it is staring them in the face. The warning signs are everywhere. Valuations stretched beyond logic, debt levels climbing to unsustainable heights, whispers from economists and analysts saying the bubble cannot last, but the crowd chooses not to hear it. Denial is comforting, and comfort is always more appealing than reality. People convince themselves that this time is different, that the old rules of markets no longer apply, that technology, globalization, or some new invention has changed the game forever. They mock those who sound the alarm, labeling them pessimists or fearmongers, and instead they surround themselves with voices that feed their illusions. Every small correction in the market is brushed off as temporary. Every warning is twisted into a reason for more optimism. It is human nature to avoid pain, and nothing is more painful than admitting that the party is about to end. So denial becomes the shield, and hope becomes the drug. Investors refuse to sell because they don't want to admit they might lose. Families keep spending because they don't want to face the idea of tightening their lifestyle. Governments and central banks insist everything is under control because the truth would spark panic. And yet, behind the scenes, cracks are widening, pressure is building, and the system is trembling under its own weight. Denial makes people blind, but it does something even worse. It makes them arrogant. They believe they are smarter than history, that they will know the exact moment to get out, that they can time the collapse perfectly. But history laughs at this arrogance because no one escapes unscathed when the cycle turns. By the time denial finally shatters and people realize the truth, it is already too late. The damage is done, the markets have turned, and the only thing left is fear. This stage is what transforms a risky situation into a guaranteed disaster, because denial delays action, it silences caution, and it magnifies the eventual fall. It is the calm before the storm, not a calm born of stability, but a silence created by the refusal to accept what is real. And when the crash finally arrives, the crowd panics. The same people who only days earlier were celebrating record highs and bragging about their gains now find themselves gripped by fear they cannot control. The optimism that once fueled their decisions evaporates in an instant, replaced by desperation and regret. They open their screens and see red everywhere, stocks plunging, assets evaporating, fortunes disappearing in hours, and they don't know what to do. Some try to hold on, telling themselves it will bounce back, but the fear keeps eating at them until they can't take it anymore. Others sell everything at once, flooding the market with panic, driving prices even lower. This is how crashes feed themselves. Panic becomes contagious, spreading like fire through a dry forest, turning fear into action and action into collapse. The same people who ignored all the warnings now scramble to find someone to blame. They blame the government, the banks, the corporations, the media, anyone but themselves, because facing their own mistakes is too painful. They forget that they were warned, that history had already shown this cycle again and again, but they chose greed over wisdom and denial over preparation. The truth is, the market didn't betray them. They betrayed themselves. Panic makes people do the exact opposite of what they should. Instead of staying calm and making rational decisions, they let fear drive them into chaos. They sell valuable assets at the bottom. They abandon long-term plans. They freeze instead of acting with clarity. In this storm of fear, the weak are exposed, and the reality of their lack of discipline is revealed for the world to see. Yet at the same time, there are a few who remain calm. While the crowd screams and runs, these few are watching with steady eyes, ready to act when the time is right. Because the truth is, panic is not just destruction, it is also opportunity. For those who prepared, for those who stayed disciplined, the collapse of the crowd becomes the moment of advantage. But the majority never see it that way, because their fear blinds them to everything except survival. The crash strips away the illusion of control, showing who built their foundation on greed and who built it on strength. So what does this mean for you? It means you cannot afford to walk blindly with the crow. D, because the crowd is always the first to fall. When everyone is chasing the same dream, when everyone is caught up in the same illusion, that is when discipline becomes your greatest weapon. You cannot follow hype, you cannot let excitement cloud your judgment, and you cannot build your future on a foundation of hope alone. Preparation is not optional, it is survival. Winners are not made when everything is easy and the world is cheering. They are made when the storm hits and everyone else is running for cover. The crash doesn't destroy you, it exposes you. It reveals whether you spent your time building strength or wasting it. It shows if your mindset is built on sand or carved from stone. The market is only a reflection of life itself. It is cycles of rise and fall, growth and collapse, prosperity and hardship. If you train yourself to see beyond the noise, to recognize the patterns, to expect the unexpected, then you are never truly shaken. When panic spreads, you remain calm. When others give up, you keep moving forward. When fear takes over, you see opportunity. The truth is, the crash separates the talkers from the doers, the weak from the strong, the dreamers from the builders. If you are disciplined, if you prepare, if you refuse to let greed and fear control you, then you will not just survive the crash, you will rise because of it. The very moment when others lose everything can become the moment you gain the most. Not because it is easy, not because luck is on your side, but because you had the courage to do what the crowd could not. The cycle will always return, the storm will always come, but what defines you is not the storm itself, it is how you stand inside it. So the next time you hear someone say, "Nobody saw it coming," remember this truth. It always happens the same way. The signs are always there. The question is, will you ignore them like the weak or prepare like the strong? The crash is not the end, it is the test. And when that test comes, you must be ready to prove that nothing, not fear, not greed, not panic, can break you.